pretty much everything was at a halt. You could barely get things done, but you needed to get things done at the same time. There was a sense around needing to actually start to make strategic decisions. And Treasury became pivotal in that sort of sphere in any organization. So that's the one thing we've learned, is that these pandemics have a way of speeding things up. But let's be honest with ourselves, we should have actually been doing this way before the pandemic. And it's something that equally today, as we sit here, and again I'll reference the gentleman who spoke earlier, we spoke about APIs and we spoke about a 5-year sort of period looking to transition. I would argue that it's actually not 5 years. We need to start to think about this quite differently. This is a 2-year sort of sphere we need to look at, because we actually don't have the luxury of time. You just never know what changes are yet to come. That's the other thing we've learned through this pandemic. A lot happened within the pandemic and after the pandemic that we could never have anticipated. The war in Ukraine is one part of it, right? And there's so many other things. If you look at just the interest rate cycles globally, I mean, we've seen unprecedented cycles over the last 2 to 3 years. And that's just to mention one particular thing that has impacted all of us, both from a banking perspective and equally from a corporate perspective. So it has equally taught us that you can't really predict, right, what's going to happen. So the speed at which we ought to effect change has to be rapid. We don't have the luxury of time. That's simply it, as a starting point. Chris?
There we go, you can hear me. So I think maybe just to expand on Na's point, the other fundamental thing that changed as a result of the pandemic was our view around, and risk appetite around, what is actually possible digitally. So prior to the pandemic, if you had asked any corporate CEO or any particularly banking CEO whether or not the business could run completely digitally with everyone working at home within a time frame of about 2 weeks, it would have been very difficult to find someone that would have said, yes, of course we can do that. But the way in which all of corporates globally and all banks globally managed to change their way of work to adopt to that circumstance, I think highlighted the fact that change doesn't have to take that long. And to Na's point around the speed of digitization, it's also as a result set an expectation for the pace of change going forward. So to your point, we don't have 5 years to have widespread API adoption. We do need to do it a lot faster. And the reality is our clients will expect us to deliver it a lot faster.
And I think the pandemic has shown us that we can do it.
Yes.
We can actually adopt quite quickly. One thing that I want to just ask the audience, and I hope if we have a brave one that can answer it, is how did the bank support you as a customer? And whether it's positive or negative, if anybody can maybe share with us, what experience did you go through during the pandemic? Nobody. Yes.
So maybe not a personal experience, but I know many of the banks have various solutions to clients repayments on their credit facilities and everything. So I think, although not a personal thing, I know that's something that many South Africans benefited from, was banks actually helping them through the pandemic, keeping up to date with their repayments on their credit accounts,
Perfect, thank you. Anybody else? No? Thank you. So let's move now further in and looking at the benefits of digitization. So digitization, and I have to be honest, I had to practice this word in front of a mirror. It's one of those words that I get tongue-tied up in. Is a very fancy word nowadays, okay? We throw this word around a lot. But what does this really, really mean? Chris, I want to look to you. What do you consider as the key points when you're busy with a massive digital or automation project? What is the key points that we need to look out for?
So I think one of the key things is having a good understanding of the difference between automation and digitization. So automation, there's various tools around to automate existing processes. You can adopt robotic process automation. You can optimize your processes. There's lots of different things that you can do. But true digitization, you actually need to re-look at your underlying function from the ground up. because being built for digital and digitizing an existing process are fundamentally different things. And it is very, very important that you focus on building for digital rather than simply digitizing what you have, especially from a competitive perspective, because where we have new entrants and fintechs and everybody coming in, the reality is they don't have our legacy baggage. So when we approach a digitization project, we have to look at it in a way that a fintech would look at it, where they don't have all of those legacy processes, procedures, etc. And it's freeing in a way because you can start with a blank slate,
Yep.
but it also means it can be very, very difficult.
100%. And now, how do you see your role as one of the main banks in South Africa, but even sub-Saharan Africa, in supporting and helping treasurers going forward?
Think of our role, and not only in the South African context, so I'll expand this beyond South Africa. I think one of the key sort of pain points that a number of treasurers face when operating on the continent is the disparate environments, regulatory environments that they have to navigate. I think it's a journey that we're on. And equally from an African perspective, so when I talk about the journey, Africa as a continent, right? I always look at the EU and I wonder if we will actually ever get there. Single currency, harmonized regulation, and pretty much that facilitates or presents the platform or the foundation that you need to be able to do a lot of the things that corporate treasurers want to do, right? Centralized treasury services, real-time information across multiple geographies and the likes. So these are the challenges, and as an African bank, we sit in a prime position to actually start to help corporates or corporate treasurers navigate this landscape. And how do we do that? It's actually in our solutions. The standardization of most of our solutions across the board goes a long way towards helping a corporate. So if a corporate is plugged into Standard Bank as its primary bank across the continent, it's important that we are able to offer that corporate not just a standardized experience, albeit tailor-made to their needs, but equally the solutions enable them to be able to actually get a broad-based view of their portfolio across multiple markets in real time, quickly, to be able to make the decisions that they need to make. So the proof of it is actually in our solutions ultimately, but we do have an opportunity to partner, and that's what we are driving towards.
So Chris, my belief is that digitization really started during the pandemic, and it really took off in the during the pandemic period. But what do you think? What's going to happen in the next 3 years? Are we still going to see the same massive impact of digitization, or is it going to slow down?
So personally, I think digitization started a long time before the pandemic. I mean, I think all of us, corporates and banks alike, have been on journeys to optimize our processes and digitize and to change the way that we do things. But what has fundamentally changed is, and I mentioned it and Niles mentioned it earlier, is the risk appetite around digital. So I think, if you look at, let's take, for example, cloud computing. 4 years ago, it was a bit of a taboo topic in banks. It was much joked about at international financial conferences that banks weren't ready to adopt cloud. These days, it's more of a norm.
Yep.
And I think the expectation around digitization has fundamentally changed, and as a result, the pace of change will continue. So it's also a journey that's never going to end. The reality is there's always new and better ways of doing things. I mean, Mornay spoke to us about APIs earlier. There's a certain standard and level of performance you can get out of an API today that will be different in 5 to 10 years' time. So it's going to be an ongoing journey.
A different need. Now I want to quickly turn my attention to the audience. So I've got 2 questions there, but I need to turn my back now to see what key points do you see as a success for digitization? So just maybe by the raise of hands, I just want to get a feel. So what do you think? Is it choose the right partner? Who would say let's choose the right partner for a perfect digital? Okay. So obviously then the other one is the way that you communicate with your bank. So is that, will that be fall into the next group? Okay. Let's move now to standards and standard practices. So now, how do you see the adoption of global standard practices in the treasury management world?
So I'm looking at Sharon because she's in my line of sight, and I'm smiling because she and I just had this conversation over tea to some extent. So I think standards actually are so fundamental to enabling the treasurer of today and tomorrow. And simply because if you look at what is important, what matters to the treasurer of today, if you don't have standards that govern and to some extent that industry participants can use as guardrails to actually be able to develop solutions, it becomes a pain for that treasurer because ultimately they would have to adhere or to actually look to consume what each unique bank, for example, brings to the table. And if it's a fintech solution, it will be a unique solution. But when you start to look at standards, and that's where ISO becomes so important. And it's not just ISO, and if I may, Louise, I think I was party to a discussion from a SWIFT perspective not too long ago where the conversation was quite centered around what role SWIFT can equally play in the API space around putting some form of standards around APIs, so that if I'm a corporate and I need to use APIs from, let's say, 3 or 4 different banks, I don't have to basically look at each in a unique manner. So standards are critical. They actually form the base, and they don't just enable solutions today, they enable solutions tomorrow as well. So for me, it's actually the bedrock.
That's key. And now maybe just on follow-up on that, so we were talking about global standards, but what are the benefits of defining actually best market practices?
I think the benefits of market practices is it equally provides almost like a template. Particularly for new entrants, if you think about it. It also keeps those who are in the particular marketplace on their toes, and it equally ensures that there is a level of, and I really don't like this word, standardization, but it's actually, provides that framework where participants in any marketplace can continue to build on and pretty much raise the bar at every single point. So I think that's equally important, and credit to the South African market, I think that we have seen, right? If I look at the different initiatives coming through, it says a lot in terms of the different market standards that we continue to set. But equally, I would say this, if you go to East Africa, there's an entire revolution happening out there. If you go to West Africa, it's in its different, sort of boat. So there's a lot happening on the continent, but it's all relevant, and it's actually contributing to our growth holistically as a continent.
Thanks, Noah. Chris, should the banks decide on these best practices? Or should the corporates actually enforce or, tell the banks this is what I want? Or should this actually be a community approach? And maybe after you've answered, we can maybe get some views from the audience as well.
So personally, I think standardization in certain forms is a little bit of a double-edged sword. So I completely agree with Na's views on the upside of standardization, especially from a client perspective. I mean, for a treasurer, if they need to pick a bank and they can say, well, actually, the format in which I'm interacting is the same, they don't have to worry about those level of details. They can focus on their business and the underlying service that they want from the bank. But where we do need to be a little bit careful is standardization through compliance doesn't necessarily foster innovation. So, and I mean, we've had a number of examples of industry projects that take many, many years. The banks and the participants in those markets spend an absolute fortune complying with those standards. I mean, DebiCheck is a perfect example of that. I think RPP is running a lot better than the DebiCheck project did. But simply having standardization and enforcing compliance on the standard, I don't think is necessarily the right way to go.
Yep.
But having a standard like, let's say, for example, the Swift ISO standard, that can inherently become a standard that people adopt, and you get adoption through participation and then innovation around that adoption, is a better upside. But it does require communication between all the parties.
Yeah.
So if we were to go and sit away in a dark cupboard and decide that we're going to take the Swift standard and nobody else uses it, then it doesn't really benefit our clients.
Yeah.
So I do think it needs to be more of a community approach. That said, there is also a space for compliance to ensure adoption and shifting to new market standards. So it's a bit of a balance.
Thanks, Chris. Any views around this here? Can we just make a mic here?
Thanks. Just a question around the role that the people providing assurance, this is typically the big four audit companies, are you seeing harmonization between what you're doing, customers are then implementing, and then you're getting assurance? The customer would clearly want assurance from whoever's doing their internal audit, either internally or outsourced externally, where you're seeing harmonization in that whole process. And do the big four audit companies, or all of them, for example, understand what's going on and are able to provide that assurance?
You can go for it, Chris.
Okay. So I think the short answer to your question is not yet. Yeah, we've had some specific compliance type adoptions under things like DebiCheck, which I'm not sure the market and all auditors necessarily understand yet. And even around things like this, the Swift ISO adoption, because it's not a true domestic standard in South Africa yet. I don't think so, but I think there could be quite a lot of upside in getting that type of process embedded with the big assurance companies, because it makes all of our lives a little bit easier. Because even with a standard like Swift, you have certain fields that are open to interpretation somewhat. People use them slightly differently. And having some form of audit over functions like that, especially in the domestic construct, could add a lot of value.
I think that also comes back to the market practice, because in that you have a market practice in South Africa, for instance, for let's take high value payments, or there's specific market practices that adheres to that. So yeah, that ties in that. Does that answer any other questions or comments around this? So I need to stand now because the screen is not working there. So I just want to get some interaction also from the audience here. So what are the most important points to improve market practice? So maybe just once again by the raise of hands. So the first one is adoption of global payment standards. The second one is improvement of local standards. And the last one is legal documentation and harmonization. So just by feel, what do you think is the most important point for best market practice? Number one. Number two, improve local standards. And then number three, legal documentation. Perfect. Thank you. And now, and I think I'm going to also ask Chris and Noel, both of you. Noel, I'll start with you also once again. If we now look towards the future of treasury management, how do you consider the evolution of real-time instant treasury? That's the first question. And then the second one is, which innovation or technology are you expecting to support this going forward?
Sure. So Louise, if I really look at it, and I think API is the buzz at the moment, if we look beyond API, I think one particular technology we haven't yet explored enough is AI. And that's something that we need to start to look at, because ultimately the complement of APIs and AI provides such a powerful proposition. And AI is actually seldom understood. It's not robotics. It's a different sort of technology that feeds off on what you actually want, what you feed it. So you can actually train, your AI to think the way you would think, predict in the way that you would predict. And that's a big game changer. So that's the one piece of technology that I think we are yet to explore. Right or wrong, I'm yet to be proven. But just looking at Treasury, I think for me, the wave that we are on now is going to stay for the foreseeable future. As I mentioned right up front, it's about speed to get there, and we have to get there quicker, both as banks and even, for our corporate treasurers as well. And ultimately, there will be a period of actually embedding, the innovation that this particular wave will bring into the ways of doing things, right? And then it takes you to the next phase. So for me, I think where we find ourselves is going to be the reality for the next, let's call it 2 to 3 years. Once it's embedded, then you will start to see a lot beyond that. That's my view personally. Chris?
Maybe just to expand on that, APIs, absolutely. I mean, it's changing the way in which we will interact with our clients and the speed at which information can flow. But I think some of the things I'm particularly looking forward to in the next, let's say, 12 to 18 months. So the ISO-based data standard with further adoption domestically. I mean, as treasurers, all of you want to be able to make informed decisions. And the richer data that you have available from all of your banking partners means you can make better decisions. And then linked to that, the ability to execute on those decisions in real time. So what Richard was talking about around the adoption of real-time payments needs to become further and further embedded into the way that we do things. I mean, I do agree with Richard's view that over time, I think real-time payments will become the standard. So when we pay each other, even in our retail lives, you will just simply expect that the money will arrive immediately. And that is going to be the way in which we will pay going forward. But linked to that, I think the one thing that we are all going to have to focus on quite a lot is fraud. With faster payments comes an increased risk of fraud. And I mean, in the retail space, you see it today with RTC, with things like profile compromises. Once the funds are moved and withdrawn from the banking system, they are very difficult to trace. The use case in the corporate scenario is slightly different, but we do have the reality of syndicates operating in corporate South Africa, and people being influenced and coerced. And the faster the money can move, the higher the risk. Yep. So it is going to be a balance between widespread real-time adoption and us making sure that we have robust fraud tools for our clients.
Thanks, Chris. Anybody from the audience have a different view or something you want to add? Maybe a question that I have, and I hope there's a brave one in the audience. What does API stand for? Okay, sorry, can you just repeat that? Thank you so much. I'm going to stand again because I just want to quickly ask the audience again for some voting. The evolution to instant treasury. What is your view? Is it a necessity, or does it bring more constraint than benefits? So, from a necessity point of view, can I get some hands up? And then, does it bring more constraints? So we're all in agreement that it's a necessity. So with that, I've actually now run out of questions for my panel, and I would like to look towards the audience if you have any additional questions for our panelists. Or comments maybe. Now, there's a question here in front. Yeah, there we go.
Good morning, Resemati from MTN. I've been listening to the conversation, and I still think we haven't learned, maybe not enough from the pandemic. Because in all that we are saying this morning, we haven't gone to appreciate the benefit of disruptive technology. We are not talking, and we Nat says, let's not talk about 5 years, let's talk about maybe 2 years. That appreciates that we don't have the 5 years. But maybe we don't even have the 2 years. We should be looking at transformation or digitization of treasury or technological enablement of treasury more from a disruptive angle. Because for me, that's what's going to push us forward much quicker. If we're still having a conversation about standardization of processes, common practices in the industry or in the sector, I don't think we have fully appreciated the benefit of disruption. I see today trying to find solutions with the banks, and all the banks are telling me, no, I can do this for you, but we'll need to plug into SWIFT. And I'm frustrated. I'm frustrated that so many years down the line, SWIFT remains the only standard or the only solution. And in my view, I've got no beef against SWIFT. let me put that on record. I've got no beef against SWIFT. But why should my connections between banks and me, and me getting bank statements, getting information from my banks have to be channeled via SWIFT, and that's the only solution that I get presented every time I'm having a conversation with the banks? Why are we not talking blockchain technology to disrupt SWIFT? Because for me, if I was sitting in SWIFT, I wouldn't be comfortable looking at how fast technology is moving. There is fast development of interconnectedness between business and business and business, and for me, it's a matter of days that blockchains brings a solution that will make processes much secure and trusted and disrupt SWIFT. I'm not beating up SWIFT,
No.
but I'm just saying, can we as treasurers start thinking disruption? Because it's disruption that's going to move us forward. If we're still planning 3 years, 4 years, 5 years, maybe it will take another pandemic to get us to be a bit more innovative to move forward. There's a whole lot of things. I mean, why don't we kill the check on the continent? And if you look around the continent, they're still signing a lot of checks. Corporates have got banking platforms, but they still, do manual processing of payments. It needs disruption for both corporates and the banks to start appreciating where technology is. It cannot be true that I'm sitting in South Africa, when I'm looking for exchange rate, I can go into Bloomberg, I can go to Reuters, I can go to all sorts of platforms. But when I get to Zambia, I get my exchange rate in the morning and at midday and at the end of the day. That's my exchange rate that I'm using for the day. So I think we need to think more disruption. And disruption is not going to be smooth. Disruption is not going to take 5 years. Disruption is going to happen very quickly. That's my input. Thank you.
Thank you. Maybe I can just also comment on the disruption side of things. I think that's good. I think it's very good. And I think it's also, and competition is always very good. And from a SWIFT perspective, we are undoubtedly, definitely moving with the times, and we are moving with the blockchains and the CBDCs. So we are engaging with a number of initiatives around these things, and new technologies that you're actually bringing forward for the corporates, for the banks, and for the customers. So from that perspective, yes, we definitely have a role to play, and I'm very excited about that role. And once again, I'm saying disruptiveness I think is very good. It's healthy in the market. It's healthy for SWIFT. It's healthy for the banks, and it's even healthy for the treasurers. So yes, and I agree with you. It's going to move fast. It's not just going to be in the next 5 to 10 years, like we've mentioned that earlier on, these things are going to move fast. And yes, we need to move with it. That's it. I don't know if you want to, from a bank perspective, want to add.
If I may, I think I fully agree with you. Disruption is now, but equally, I think we didn't touch much on it around, DTLs and sort of what's happening in that space. What I will say, though, is that for us, from a South African perspective, we need to start to look at how we disrupt the regulatory framework. That is our biggest unlock. Without that, everything that we do will always be pulled back. It doesn't matter how good the technology is. And I'll take it one step further, even beyond South Africa and on the African continent. What we found is, to use an example, we have a program of work that we're running, and we're looking at cloud technology purely. That's it, nothing else. You get to a particular jurisdiction, and the regulator there says, no, sorry, I'm not in this movie. I want on-prem solutions. That's a whole different conversation. It takes you back, right? And so if there's one area we can aim to disrupt, and it's a collective disruption, right? This is not even technology. It's those engagements with our governing bodies, regulators. How do we actually change the thinking that allows disruptive technologies to take root and to flourish?
And I think, we spoke about it during the break around the change to the correspondent banking model going forward.
Yep.
So, there's no doubt that blockchain will change that. And whether or not it is a SWIFT blockchain or some other blockchain, it is absolutely going to be part of how we move money globally. And look, I'm speaking specifically around central bank digital currencies, not Bitcoin, etc., because that's a different proposition. But if you're looking at what's happening around the CDBCs at the moment from a blockchain perspective, there are currency pools being created, there are nodes being created to participate for dollars, for euros, for pounds. It's moving, and it's actually moving quite quickly. What we need to then figure out is, what does that mean for the current ways of doing things, the current ways of moving money? And the reality is, the SWIFT network, we can say that it's been around for a long time, and in some ways it needs modernization, but it is still a very significant network that we can leverage to move money around. Because the reality is, you need some form of connectivity between the two parties to move the money. Whether or not it's on a blockchain or via SWIFT, I think the competition is good because it fosters innovation.
Exactly.
So I think that's where there's upside for all of us.
100%. And from a SWIFT perspective, how do you interlink all these different CBDCs and digital currencies, and how do you close these loops? And this is very, very fundamental what we're looking at, and working closely together with the banks to see how we can foster that. But thank you very much for your comments. Anybody else?
Hi. Dennis here from SWIFT. Just to respond to the gentleman earlier, I think it's been clarified that SWIFT is not a technology but a platform. So we're also obviously looking at new technologies like DLT. We have done a lot of proof of concepts. At this point, the technology cannot handle the volumes that go through the system. So if you take one of the local banks, they're doing about 200,000 payments, if not more, in a single day. DLT just cannot handle that. So, and then just for clarification, SWIFT is a cooperative, so it's owned by its shareholders, which are the commercial banks. So you would have to be convincing, the 11, 13,000 endpoints that they need to, change fundamentally. So, but no, I won't comment any further on that. So maybe just a question to the panel. At no stage have so I think, Na, you said something very interesting. Obviously we've got things happening in Nigeria, West Africa. We've got things happening in East Africa, Tanzania, and Kenya. And then obviously we've got in South Africa with the Rapid Payments Project, et cetera, et cetera. But these are now in different regions. How do we get something where it's cross Pan-Africa and, to do business with each other, instead of, if you were operating in Nigeria as a bank, you've got a whole set of standards, a whole lot of operating standards, et cetera, et cetera. If you're in South Africa, you're in a different world. If you're in East Africa, you're in a different world. And then maybe just to add to that, is there not a place for a regulator or central banks to help these different regions look to be more interactive with each other or interlinking with each other than continuously developing, you know, in isolation?
Yeah. So if I may, Louise, so I'm not sure if you've heard of PAPS, the Pan-African Payments Settlement System. And that's the first attempt to actually respond to exactly what you've said. So basically what PAPS is a platform to facilitate payments intra-Africa, cross-border payments. At the moment, it is limited to specific trade transactions. And it's twofold, right? It's firstly to be able to provide that, let's call it the payment rails for payments intra-Africa without going through a correspondent banking sort of network. And then the second part of it is to foster trade. And it's also about looking at avoiding having to convert money into hard currency and then back into local currency for trade transactions. So that is the first initiative we've seen to try to harmonize or bring a lot of these, let's call them regional initiatives together under one umbrella. Is there an opportunity for a specific central bank to be able to sort of play that regulatory role? At the moment, it's tricky because the central banks are very, very different. Let's acknowledge what we are, right? As a continent, we are not one country, as many people often refer to Africa as one. We're actually individual countries. We take pride in what we have as a country in South Africa. Other countries equally do the same. And it runs deeper, right? It's about your governors being in control, the currency component. I think a few times there have been attempts to have a single currency on the continent. No one is willing to give up their currency. Whether it's good, it's bad, that's beside the point. The point is everyone takes pride in what they have. So it's a journey and we're nowhere near there. I think perhaps is a starting point. At the moment, what I know is that it is being piloted in West Africa. I think it's AfriExim Bank. That's the bank that is leading that. And it falls under a work stream within the African, sort of the Pan-African Trade Agreement, which is also being governed by the African Union in itself. So we're moving in some direction, but we are far from getting there. And the success of PAPS actually will depend on how the industry participants, like ourselves as banks, actually respond to it. And it's actually quite smart the way they've gone about it, because I've seen in West Africa, the central banks are now enforcing it. So it will be interesting to see when central banks start to enforce in every single country the use of PAPS, what that means for us. So time will tell. Not a long time. Hopefully in the next, let's call it 6 to 12 months, we'll get a good sense.
Question is from Lucien from Avenge. Sorry to take you back. Chris, you mentioned something about the difference between digitization and automation. I think I missed the explanation that you gave. So I just wanted to, maybe if you can just go back and just give that, what will be the difference, because you mentioned it is a difference. And if the difference is that vast, is there a point where the two would interface?
Yes, so I think so. There's always going to be a connection between automation of existing processes and true digitization, because it's not feasible to completely relook at your entire business and say, great, we've built a physical business over 20 years and we're going to now switch to digital overnight and remove our physical footprint. I mean, as banks, that's our branch network, right? And it's debatable whether or not people actually want us to get rid of our branches. Where we've closed down certain branches, we've actually had a lot of pushback from communities because they take a lot of comfort in that physical presence. So there's a balance there in moving from physical to fully digital. But so just to explain the difference from our perspective, and I'm happy to take other views, is Automation for me is if you take an existing process and digitize it. So it's probably people-based at the moment. There's handoffs of pieces of paper. We move things around between different systems. You can automate that in different ways. So integration of systems better, using robotics. It's effectively just automating an existing process. Digitization for me is taking something that was not digital and making it truly digital. There are different ways to go about it. You don't have to completely redesign everything from the ground up. You can simply digitize an existing process and remove certain steps and remove people from it. But you just also need to understand that there are competitors out there that are looking at it from a digital first lens. So digital native companies are looking at things very differently to the way that we would. And you see it, for example, let's take payments. So the largest payments providers in the world are not banks. And the companies that are making significant differences and looking at new ways of doing things, they don't behave like banks. They don't wait for the regulation. They don't worry about mainframe interactions and things like that. They look at things completely differently. So they have looked at the topic of payments from a completely different lens from a banking perspective. And it's just an important aspect to remember when looking at digitization.
Any other questions or comments? There.
Thanks so much. It's Harry from Hyphen Technology. Just perhaps in response to the questions and comments from the front in terms of why we are talking about APIs on a 5 or 10 year window and why all of these things take so long. I think there has to be some level of acknowledgement, and the question is coming, don't worry, there's a question. There has to be some level of acknowledgement that it's not through the lack of innovation that we don't see progress. It's through the lack of adoption in the most instances. So COVID didn't bring new technology. COVID didn't bring new ways of thinking or working or new innovations. COVID brought the incentive to adopt overnight. Now, so the question for me is, if we're not happy with the speed of progress, how do we get adoption or the incentive for adoption without having to inject some crisis of some sort? Is there a way to do that?
Yeah. Chris.
Okay, so it's interesting. I was having a conversation along similar lines with Trevor this morning over coffee. So I think you can, but it speaks to the potential downside of a truly digital, truly remote world, is you do lose a component of the connection. And your point about lack of adoption is very, very important. The reality is, if we as banks build something and we go out and position it in the market and it doesn't get taken up, we haven't understood our clients and we haven't understood the market need. It's actually that simple. So that connection, that engagement with clients is probably the most important factor in making sure that you have adoption. So even with rapid payments, there's going to be an industry standard for rapid payments. If we don't spend the time with clients to understand what it means for your business to leverage this new real-time service, we won't get adoption. And the reality is someone else will be having that conversation. So rapid payments will grow, but our share of it wouldn't. So I do think that's a key component that we need to balance in this new digital world, is not to lose those connections and understanding of what clients are looking for.
Yeah, and if I just may add to what Chris has said, I always look at Apple. Sorry, I'm an Apple person, so no offense to anybody who is Samsung or otherwise. But I always look at Apple. As a user, Apple has never, not once, come to me to ask me what I want. But somehow they are able to deliver to what I didn't even know I needed. I get the device and it is there. It's perfect. I suddenly start to think, actually, I can't imagine life without it. Whereas I had never thought about it before. And I think that's where we ought to be from a financial perspective, in terms of just being able to, even when we talk about understanding what our clients want, what we've done a lot in the past is I come to you, I understand what you would like, and I try to respond to what you want. I go to the next person, I understand what they like, and I actually would try to respond to that. And we actually end up in a place where we're lost. We get lost, right? Because Then you have a solution that's only fit for a few, but not for many. That's when you start to struggle with adoption, because you can't offer what every single person needs on a tailor-made basis. So there's a lot for us to actually think about and learn from other industries who I think they're actually doing it much better than where we find ourselves. So there's a journey for us in that space, but I say journey lightly. It's not 10 years, it's a short space of time. As long as we acknowledge it and we are willing to learn, I think that's where we find ourselves.
Thanks, Noel. Oh, there's another question over there.
I think it will be more of a follow-up to the gentleman there, the emphasis being more on adoption. Is the banks really playing a hardball here, referring more to the rapid payments, in a sense that currently as you want to make let's make an example of making an immediate payment, there's extra costs that run with it. So is the banks delaying this process to actually effect it, or because of there's a monetary gain in these, or is just other compliance issues that are sitting behind it?
So, I mean, yeah, I can respond. I mean, it'll be interesting to get Richard's views as well, because he's intimately involved in this. But I think, so the reality is, yes, we make money on some of the legacy real-time payment streams, right? That's a fact. But having been involved in a number of industry projects, delaying them is not in our interests. It sucks up a significant amount of our people's time, our development capacity, our industry testing capacity. They really are mammoth projects. And I think if we go outside of South Africa, if we look at the open API standards that they tried to introduce in the UK, they're still working on it. It still hasn't really worked. I mean, they've been at that for 10 years, I think. Those big regulatory compliance projects are really hard to get alignment and execution across everybody. And I mean, even if we look at rapid payments, right? So in March, we're going in with the pilot. There's only 4 banks involved. So we haven't even got all of the banks involved in that testing yet. So in March, we will all test, the 4 of us will test with each other, and we'll see how it's working and iron out any issues. But every time a new bank comes on, we all have to go through testing again and go through all of those cycles. So I hear your point, but it really isn't in our best interests to delay these types of projects, because they suck up significant amounts of capacity that we then can't spend on client-side solutions. So absolutely, we all want rapid payments because it's going to be a great enabler to the way in which we process going forward. But that's not where the innovation is going to come, because we're all going to have the same rail. What we would rather be doing is spending time with clients and working on value-add solutions on top of that infrastructure.
Yeah, I do get the explanation, and as you mentioned that, you always get your lead banks doing it, and then afterwards you get other banks coming through. But as we understand, that technology is rapidly going forward. So basically what you've been working on, it might have sort of like become outdated as you bring in a new bank. So you have to restart the new process. So why don't you run the first process? Everyone just needs to fit into what has been running, and then you improve it as you go on.
So that is the process that we follow. So there'll be an industry switch standard that we all plug into. But because of the nature of real-time payments, when you bring on a new participant, they need to test that the flows are working correctly with the participant. So the efforts in this March go live will be significant because it's new infrastructure, new connectivity, all of the banks interacting in new ways. When the next bank comes on, it's not the same effort again. But the reality is they need to test with all of us. They can't, so let's say, for example, Capitec comes on board. They can't test with only ABSA or only FirstRand. They need to make sure that it's working with all of the participants in a uniform way. And there are interbank standards, but the reality is the devil's in the detail, and things do sometimes go wrong. So they need to make sure that they can sign off on their testing, but they're not going to have client issues. Because at the end of the day, If they go live and a client experiences an issue on a payment, it's their problem to solve, especially if the client sits with a loss. So they will want to make sure that it's working with all of the participants. So it's not the same level of effort each time, but the reality is it's an ongoing effort until everybody's on board.
I don't see any other hands. No, there's a hand.
Hi, sorry, Susan from Safar. First question, rapid payments, would this be working through the SWIFT payments as well?
So no, the Rapid Payments Initiative is a South African domestic standard. So it's not necessarily plugged into the SWIFT immediate rails. But the two will coexist, and I think over time we'll see a nice evolution of yourselves just coming to us and saying, I'd like to execute the following in real time. And you won't have to care which rail it goes down. There'll be optimization, you can do least cost routing, best settlement routing, etc. And it can be then a combination of the RTGS rails from a SWIFT perspective, the RPP rails, and there's a new rail coming in card push payments as well, which is an immediate push to a card number, which is also instant. So there's going to be a number of options available to you going forward, but you won't necessarily need to care which rail it goes down. You can just say to us, this is how I want my transaction to, or this is the outcome that I'm looking for my transaction, and we can route it accordingly.
I don't see any other hands. No. So I think that concludes our session. Thank you very much.
Thank you.
Thank you.